Hello traders, Gary Wagner here with Wagner Financial Group's Daily Gold Forex Market Update. Well, today we saw a pretty nice move in gold. It's currently trading at 1094. For those of you who have been following our trades, we did enter a long position, and that was all based on this doji that we got back a few days ago. As you know, the doji is a sign of consolidation. It typically happens if the market is selling off hard and we see an extreme high and low as we did right here, and you then get a close that is equal or almost the same as the open as we did here, you get the doji. Now the doji can be an absolute sign of consolidation. So we were looking at that point for an entry point in the marketplace. On the following day, we got a candle that's called an inverted hammer. Again, another sign of consolidation. So the doji and the inverted hammer really gave us an indication that we might in fact be looking at a potential bottom or a potential entry point in the market. Well, we got that the following day. We did get what we call a confirming candle, and the confirming candle was this large white candle. So on the following day, we actually issued the call. So we entered the market roughly in the area of 1079 to 1080, and I had recommended at that point placing our stops at 1060. Now, we did get what we're looking for. In other words, we got a nice confirming candle here today, and this candle here is currently trading at about 1094. And so that is a nice solid move for us. We've got about $14 in the trade. In terms of the stop placement, I'm going to leave it where it is. I'm thinking that we should probably move that up below these candles, but I want to give it another day of trading. The swings in the gold market can be fairly erratic. So where are we looking for the marketplace to go itself? Where are we looking at potential points of resistance? Well, there's a couple of clear-cut points. These series of tops right here, and that's currently where we're trading. I want to see how it reacts through there. And then right at 1125, I've got another top that is going to be indicative, and if we can follow this set of candles here, you can see the bands that we're currently looking at in terms of where we're hoping this market will trade. And so I think it absolutely has the potential to go to 1110. At 1110 we'll see how it reacts, and if in fact it can go to 1120, 1125, we'll see where the market might bring us. In terms of some other indicators that we've been looking at, we did get a nice confluence in terms of where we saw stochastics. Now, stochastics are just starting to cross right in here. And you can see we got the signal really one day prior to the cross. In many cases, candlesticks will allow you to view a signal as a leading indicator. In other words, by looking at the doji, we were looking at the potential for the market to consolidate, and the stochastics were still moving down. They really hadn't begun to cross. Sometimes you'll see them act at the same time. Sometimes you'll see them act in confluence. So, for example, up at this top, when we hit our all-time record high, and this is back in November last year, if we take a look at where the stochastics cross, they crossed really on the strong down day. This is the day where gold fell about $50. Now, we actually got our signal based on a pattern called a dark cloud cover. And that's this pattern right here. Now, the dark cloud cover happens when you've got a market that is in an uptrend. And so what we have is we have a whole series all along the way of the markets moving higher. We get a large white candle. We then get a black candle which opens at or above and closes at or below the midpoint of the following candle. So this right here, this 2-day pattern, is what's called the dark cloud cover. Now, of course, we do not get confirmation until the following day. Whenever we look at candlesticks, we want it to confirm. So when the market traded lower, traders were probably able to enter anywhere in this band, and even if they entered on the close of the day, they still had a significant nice drop and a good trade. We can look at a couple of the other patterns. For example, back in October, with one of the first rise, we have a candle called an engulfing bullish. This is a pattern that's indicative of a market that's in a major upswing. And if we look, our stochastics do not really cross until 1, 2, 3, 4 days later. And the same thing with this buy that you're looking at, which is this series of this doji right in here. If we look at where our stochastics cross, they're not going to cross for another 2 or 3 days. So a lot of times when we're looking at the candlesticks, we absolutely want to look at them in conjunction with the other technical indicators, but realize some of the oversold, overbought oscillators will not react as quickly as the candlestick patterns will and give us an indication of market direction. Again, it was a good trading day. Let's stay long the gold. Gary Wagner, Wagner Financial Group, good trading to you.